Hello everyone and welcome to Day Trader S&P 500. It's Sunday morning, April 13th, 2025. This is Dale Woodson, editor of Woodson Wave Report. I'll let you guys know you can auto trade our accounts here with Striker Securities, and we're excited to announce that on the performance page here on Striker, Triggers and Targets by Woodson Wave Report is #1 now for the past 3 months, with a net realized gain of over 10,000, #1 for the 3-month period since January 11th, 2025. So we're happy about that. Let me go ahead and highlight that. There we go. Okay, and we're looking to build on that in the longer time frames, if you will. So let's start here with our bonds, US 10-year. A lot going on here. We have amazing things to report. I wish there was rating services on bonds. When they used to do it, we were #1, but they haven't done it in a long time. Anyway, without further ado, we have a 1 up here with Roman numerals, a 2 down. The wave 3 target is up there in green, 7.255. That's the biggest, longest term, if you will. Okay, biggest degree of trend. Okay, from that wave 2 low, we have a 1 up in circle, 2 down in circle, and wave 3 equals 1 at 5.367%. Now these are minimum targets. 3s usually go 1.618, but we're giving you the minimum for now. That's the second degree of trend. So from that 2 with a circle around it low, we have a 1 up in parentheses, a 2 down, and that 3 target is 5.044%. And then from that wave 2 low, we have a 1 up and a 2 down, which is a 382. And you can see we just edged above there, which gave us confirmation that wave 3 up is in play, and that initial target is 4.916. Okay, so I think we can show this if we can get out of this and look at an hourly chart and pin it down here. There we go, and there's our hourly, and we've got triggers and targets all over the place here. Okay, there's our wave 2 low, there's 1 up, there's 2 down, a perfect 382, and there's where 3 equals 1 at 4.916, and that's the larger degree of trend here. So confirmation arrived right here. That is the trigger, that is the target. Okay, I think we can show this on our bond report, if I can pull that up. There it is. Okay, this is basically the same thing. Just put this out this morning to our newsletter subscribers. There's the daily chart. Oh, I want to show you guys where it's wrong. There's the hourly chart. There's the trigger. There's the targets. Okay, that's at the smaller degree of trend. 1 in parentheses, 2 down. There's the 3 target there. There's the lower degree 3 target there. Okay, and I want to show you guys, because we do this, we always do this first thing we ask ourselves when we make a trade or when we do a chart: where is it wrong? Okay, so we've got it here in all 4 degrees of trend. Okay, there's wave 3 all the way from the year 2020 low. There's the targets. Where is it wrong? When it moves above the wave 2, below the wave 2 low, and I can show you that on the bigger chart here. There's the wave 2 low. So there's 1 up, 2 down in Roman numerals, 3 up. Where's it wrong? It has to go below this wave 2 low of 3.253%. Okay, and here we go here. There it is there. So this one with a circle around it, trigger, target. Where's it wrong? When it moves below that wave 2 low with a circle around it, or primary degree. So that is up here. There is the 1 at 5.021. There is the 2, a direct hit to within 1/1000th of a percent, by the way. Okay, so this 3 up with a circle around it is wrong when it goes below this wave 2 low. That's the second degree of trend. Okay, we get to the 3rd degree, okay, with parentheses, and that is the intermediate degree of trend. And there's our target. Where is it wrong? When it goes below that wave 2 low. I'm sorry, am I on the intermediate? Yeah, that was primary. This is intermediate. Okay, So we'll go to that 3 with parentheses around it. Okay, here it is here. All right, there's the 1 in parentheses, there's the 2, and there is the 3 target. There's a 1.618, there's the 1 at 5.044. And when is that wrong? When it goes below this wave 2 low of 3.860%, which was within 1/100th of a percentage point for the wave 2 target. Okay, and one more, 4 degrees of trend here. We'll see how this plays out. This is the smallest degree of trend, the wave 3 at sub-minuet degree, if you will, and that's already been achieved. That's the exciting news that happened Friday. Okay, a move below that low there, and it was already achieved because it went above the wave 1 high, but I'll show you guys that. Might be easier on this chart here. We had a 1 up at 513. Might have that wrong. I think that's 513. Then a 2 down, a perfect 382, and we moved above the wave 1 high. So that means this wave 3 target of 4.916 is in play, and we'll get above that 4.806 degree of trend. Where is it wrong? It goes below this wave 2 low. Okay, and that's 4.264%, small print there. Okay, we can show you guys this again on the chart right here. There we go. That hit right on the 382. 4.264 is what it is. Okay, and there's what we're looking at for target. So bad news for the stock market. The bond market, interest rates are going up, prices are going down. They move inverse to the interest rates. So we got validation of our lowest degree of trend. That wave 3 up is in play. Okay, so let's go from there. Let's go to the big picture S&P, and this is a weekly chart of the S&P cash. You can see we had a wave 3 up here. We had an expanding triangle wave 4 down here. We're going to look at the purple count because that's the operative count. That's the primary count. We have, let me get this more in focus. Okay, there. We know where the wave 4. There's 1 in parentheses. There is 2. All right, 3 extended or subdivided into 1, 2, 3, 4, 5. You can argue where that is there, but we have 3 equaled 1 at 61.18. We had 61.47 as the February 19th high. But here is the key, the 48.18 level. That's the wave 1 in parentheses high. If this is 4 down, it should not go below that 48.18. And you can see the low so far is 48.35. So what does this mean? If this goes below 48.18, it means that this market down from the all-time high is correcting more than this 5-wave advance here. Okay, so we'll see, or it could be correcting just this 5-wave advance. I'm sorry, it would be more than that. So we'll see on which degree of trend this correction is, but it's right on the edge of violating the wave 1 high, which means it could be correcting much, much more, which will bring other targets into play. You can see it's already hit the 382, and there's the 500 there, which moves below that wave 1 low. So S&P long-term weekly log chart. That's it right there. Do we want to get into, let's get into the hourly here. I think that's it there. There's the hourly from that all-time high. We'll make this bigger full screen so we can see. We have a 1 down here, a 2 up here. This is a little different than the S&P futures or the ES, but we'll get into that when we flip over to the futures. Okay, so from that 2 high, our 3 targets were here, already passed. There's the 1618 right there at 47.46. Didn't quite get there. Got to 48.35, and it started moving up. This wave 2 here has held below this wave 1. Okay, and that should be, yeah, here's 1 down, 2 up. Okay, or 3 down, 4 up. And in E-minis, this 4 went above this 1, so we subdivided into 1, 2. So for the cash, I'm showing them both. But we've got a 1 down, 2 up. That's 3, that's 4, as long as it stays below 55.04. If it goes above there, then we've got 1 of 3, 2 of 3, and this 2 can go all the way up, but it cannot go above the 57.86 high. Okay, then it's negated. We always ask ourselves again, where is it wrong? So this has huge downside implications. If this is 1 and this is 2, even if this is 3 and this is 4, 5 will go below the wave 3 low. But if it's just a series of 1s and 2s, 1 down, 2 up, 1 down, 2 up at 2 degrees of trend, this wave 3 is some pretty fierce targets here. So we'll see how that plays out on the S&P cash. We want to get to the ES futures, and we want to do the daily chart here. Put that in full screen. There's the all-time high. There's 1 down. You can see it here. 2 up. And this is a series of 1s and 2s. There's a 1 in purple at a lower degree of trend. A 2 in purple at a lower degree of trend. Because as you can see, this high here went above this wave 1 low, which means this could be a 1 down, 2 up in parentheses, 3 down in parentheses, 4 up. So it's a series of 1s and 2s. Okay, and you can see at 2 degrees of trend, first with the black with parentheses, you can see the targets there. And then if it's a 1, 2, 1, 2, you can see the 3 targets there. They're significantly lower. And this count is wrong with the purple when it goes above this wave 2 with the parentheses high of 58.37 Where is it right? When it goes below this wave 1 low at 48.32, and there's your targets there. There's the larger degree wave 3 targets there. So we'll see how that plays out. The alternate, if it's wrong, then this is the alternate count: an A down, a B up, a C down, done, and it goes up past 55.28, past 58.37, past 61.66. Okay, so we'll see how that plays out, and that is the ES on. That's the daily there. Okay, I think that's pretty much it. Let me see if I had something else I wanted to show you guys here. We have our downside triggers and targets here, and we put that out to our monthly subscribers with daily reports. So that's pretty much what we just showed you guys with all the different targets there. Okay, and let's see, did we have anything else? I'll show you guys this. I changed the date to Monday, but this was our last report. Oh yeah, there's the triggers and targets there. There's our with Striker Securities, the auto trades. Okay, so if you're auto trading with Striker, which is up here, then you're happy. You're making money. You're making more than everybody else because we're number 1. Hope to keep that. Hard to do, but we'll stay at it. Okay. There's the series of 1s and 2s on the E-mini futures. Okay, there's a clarification. And what did we have here? And that's the Fibonacci time spirals. Wanted to say this for you guys. We're putting this out for the last few days to our subscribers to our newsletter. Historically, crashes have occurred at Fibonacci 55 days after the all-time high. If the market falls apart, the 55 days from the 219 all-time high is Tuesday, April 15th. I want to stress, while a crash is a rare and low probability event, at this point is on the table, which means most, if not all, crashes. We have a crashes report we did back in 2008. I think I'll republish it, but most, if not all, crashes have occurred within plus or minus 1 to 2 days of 55 days after the all-time high. That being said, there's been many all-time highs where 55 days later was not a crash. So again, it's a low probability event, but it is on the table. We'll see how Monday and Tuesday play out, and that's it. So we'll know soon enough. It's Sunday already. Okay, let's leave you guys with this on the ES right here. There we go. There's our targets, and there's our wave counts, and there's our alternate count. Or is it wrong? We've got the ABC in red. We've got a 1 and 2 and a 1 and 2, a series of 1s down and 2s up. And we have our upside parameters, our make or break, where is it wrong, and our downside targets and validation points. So we're all set to go for the week and for Monday and Tuesday. Until next time, Take care, everyone.